It's very rare in someone's career that you see such a mismatch between supply and demand fundamentals, and the opportunity that presents is absolutely extraordinary.
Hello and welcome to CEO Insights. I'm Marilyn de Guzman with Investing News Network. Today we're talking to Craig Parry, Executive Chairman for Vizsla Copper. He will share his insights on the copper market and the widening gap between supply and demand. Welcome, Craig.
Hey, Marilyn. Good to be with you.
Yeah, good to see you too. So first off, I guess, could you provide us an overview of the company and recent project developments?
Sure. Vizsla Copper, we're a spin out of Vizsla Silver, which we started back in 2017. We had a number of copper assets in British Columbia. We've since expanded that. We acquired Consolidated Wood Jam, which gives us the giant Wood Jam project. We've got 1 million ounces of gold, or nearly 1 million ounces of gold, and about 2 billion pounds of copper in resource, and some of the most compelling copper exploration targets that I've seen in many, many years. We're well funded. We've got a great track record of exploration success across our group, and including with the team in Vizsla Copper, and we'll be drilling shortly.
Oh, that's exciting. So we're talking about copper today, and there's been a lot of activity around copper in recent years, with the move towards electrification and carbon reduction. Could you give us some insights, like your insights on the copper market, particularly in how you see the prices, accelerating and the effects in the market with what's going on globally?
Sure, Marilyn. I think we're going to see in this next cycle and in the next few years, and certainly by the end of the decade, $20 per pound copper. That's based on history as an example, and all of the factors that we're seeing on the supply side that completely mismatch with what's coming on the demand side. So, of course, in the last cycle, we saw copper. When I joined Rio Tinto in 1999, we saw 70, 71, 72 cent per pound copper price. By about 2004, the copper price had risen very, very dramatically, and it went, of course, as high as $4.80. So we know that in a scenario where demand significantly outstrips supply, that we can see the metal price perform extraordinarily well, and in that case, it went up 5 times to over $4.50 a pound. We've seen that in other metals in recent times. If you look at lithium, you've seen the price rise over 10 times. And I think we're getting into the exact same supply-demand dynamic that we did last time round, although this is going to be much greater, and I'll explain that. The last cycle driven by largely a localised factor, a massive localised factor, of course, which was the urbanisation of a good chunk of China's population and the demand that came for the green metal copper that came out of that. This time around, what we're seeing is a global phenomenon. The electrification of the planet, the move towards EVs, and this future-facing metal, I think, is set to do better than it did last cycle because of the size of that demand increase that's coming. Last time round, we saw the copper consumption or demand rise from about 14 or 15 million tonnes per annum up to 20 million tonnes per annum. So about a 33% increase in demand. And that was enough to drive prices up 5 times. Now, if you listen to Trafigura and some of the better economic analysts out there, they suggest that copper this time, we're talking about a 21 million tonne per annum market at the moment, going towards 30 million tonnes per annum. So again, well over a 30% increase in demand is coming by the back end of this decade. Now, that's matched again with really serious supply-side constraints. And those supply-side constraints have only gotten worse over the last 10 years of downturn in the mining sector. You've seen major copper mines go deeper, grades are coming down, production. They're struggling to keep up with production. And then you match that with permitting issues, challenges in raising capital and developing projects. And I just can't see how we can possibly keep up with the demand that's coming. And you've seen the metal price rise pretty strongly in the last couple of years, from as low as $2.30. We're sitting at about $4.06 today as we speak. So you've seen, with modest demand increase, a nearly doubling of the metal price. When we see a complete mismatch, as we will in the next 4 or 5 years, where demand shot up so dramatically and supply has just not been able to keep up, I think that's when we're going to see $20 per pound copper price. We may even see $30 a pound copper price. So for us, it's an extraordinary opportunity. You don't see these sort of market mismatches come along too often, but copper is an extraordinary place to invest right now. I should add a couple of other data points in there. I mentioned the it takes to permit projects. Unfortunately, this downturn that we've been through means that not many projects have advanced through the necessary phases of studies and into development. So we're not going to see a big supply response anytime soon. And certainly some of the bigger mines in the world, as I say, are getting longer in the tooth. And so they won't be able to meet that coming demand either. The other thing is that we've seen a complete underinvestment in the sector over the last 10 years. And so that will present challenges. I think the permitting side is crucial as well. It's getting harder to permit mining projects. If you look at Peru at the moment, we've looked at projects there that we've rejected, and we haven't, the projects we've rejected there are simply because people can't get licenses to drill the projects, let alone build a mine at these projects. So our challenges are almost insurmountable on that front. And I can tell you here at our group, our head company, our umbrella group called Inventor Capital, we spent the past 2 years kicking the tires and looking for a serious copper acquisition. And we've looked at over 300 copper projects over the last 2 years. We've done serious due diligence on about 10 or 20 of those. And I can tell you that the cupboard's bare. We don't see many good quality development projects that are ready to come on stream anytime soon, or that can be even brought into production in the next 5 to 10 years. So we think that there's simply no way you can keep up with this demand that's coming. And then the last data point I'll tell you is that I think the average age of employees at major copper mines these days, in the Americas at least, is nearly 50 years of age. And so people are starting to reach retirement age, and it's going to be hard to find a workforce to help develop these projects and bring them on stream. So there's a bunch of contributing factors, I think, that will see us completely unable to meet this growth in demand that's obviously coming and very clearly coming. So I think the only solution to what we see will be very much higher prices, higher incentive prices, and then maybe over the next 10 years we can start developing projects and meeting that growing demand. So it's very rare in someone's career that you see such a mismatch and between supply and demand fundamentals. And the opportunity that presents is absolutely extraordinary. I think, some great fortunes are going to be made out of the copper market over the next 10 years.
You made an interesting point about skills necessary because, it's an aging workforce. What measures specifically, I guess, from the perspective of Vizsla Copper, are there measures that are being undertaken in terms of training a new generation of workers in the industry? Certainly, Marilyn. We over the last few years, our group of companies under Inventor Capital has built up enough that we're being able to attract really, really good people with a lot of experience. And, I surround myself these days with very bright young people who are still hungry and keen to, build projects and build their own wealth. So we've been able to really recruit some absolute superstars. And you look at my partners here, Michael Connett, Jamie Keach, Velko Bricic, Charles Funk, all brilliant young people who have enormous potential and are doing building great businesses. But it's not easy to do, and certainly
looking around for good geologists these days. They're in red hot demand once again. It's hard to find those people. But when it comes to building a mining project, that's when it gets really tricky. You know, we've got a strategic alliance with Ausenco Engineering, who built some of the, you know, the leading independent mine EPC contractor globally. And I know Simon Smirlek, who's the COO there, and Zimmy Meeker, my friends, tell me it's becoming incredibly difficult to find quality people to send, particularly people who want to go to site and actually do things and build things. And so I can see a massive challenge on that front coming. And, you know, not many people are talking about that at all. I think, you know, in the next 5 years, we're going to have to train up a lot of people, and it's largely not being done at the moment. So it's another hardcore supply side constraint.
So you talked about the challenges with sort of closing that gap between copper supply and demand. What you foresee as, you know, what's ahead in sort of the copper market. Can you talk about some of the implications, you know, of a copper supply crunch, especially in light of, you know, the global trend toward decarbonization and electrification?
Look, well, there's a few clear things that will happen. Of course, you know, that supply-demand imbalance will lead to much higher prices. That will create incentives to bring on new production. Well, my key reasoning here that we'll see $20 or $30 per pound copper. Firstly, you know, I mentioned up front there that we saw that last time round. You know, it's not unusual for a commodity price to increase 5 times in a serious supply demand gap situation. So we saw that. Here, as I say, it's a global phenomenon that's driving this. It's the whole world moving towards electrification and EVs. So a much larger potential market factor. And so I think that you know, we will see a massive increase in prices. What's going to be interesting, though, is that last time around you did see some pretty major projects come on stream. I don't think much permitting and studies have done on some of the biggest sort of development opportunities globally. You know, a lot of projects have been mothballed. You have to, you know, I spent 10 years with Rio Tinto and I've done this a number of times, whereby you mothball the project, then you have to go and refresh your PEA, your studies, your feasibility studies, and start with the project afresh. Often that has implications for permitting. So we'll see. I think this time around we're going to see a real lag and perhaps a complete inability for copper production to catch up to demand, and that will just simply lead to much higher prices, scarcity of the product, scarcity of copper, and it'll take and prices will sit up at a very high level for a long time. I think last time around, if you go back to sort of the early 2000s through to 2000, you know, a lot of people thought that copper would go back to $1. Well, it came close in the GFC and subsequent downturns, but it's always sort of hovered well above $2. So it's up 3 times since the late 90s. So I think we'll see sustained prices. Very high prices, extraordinarily high prices. People don't see what's coming. I think, you know, I'm probably the only pundit out there at the moment talking about $20 or $30 a pound copper. But you know, it's simply going to mean that people are going to have to pay more for their copper and for their EVs. You know, our customers like Tesla and the like will pay more, and they're probably the key factors. I think over time, though, there will be immense pressure on governments, on First Nations groups, anyone that is a gatekeeper to permitting a project, to permit projects more quickly once we get going here. And of course, you know, with higher prices, companies will be in a better position to spend money and develop projects. So, you know, at some point there will be a supply response, but I think that's probably 10 years away, a serious supply response.
Yeah, that's. I wonder if you're seeing. You know, you mentioned that permitting, and you know, that's another, I guess, area of in this whole spectrum, right? Like the government side, the permitting side. Are you seeing changes though? Like, because we've been talking about this widening gap between supply and demand, and what needs to be done so that we can, you know, keep up with supply. Are you seeing changes though, or you know, improvements in how governments or the local communities are viewing, you know, the mineral sector and the mining companies?
Look, it's on a sort of case-by-case basis, I suppose. If you look at Chile recently, I think there's a company down there, Rio 2, that have had their project hasn't gone through the municipal or the provincial phase of permitting twice now. A project where they've met every single stipulation, every guideline, and still they haven't been able to get their permit down in Chile. As I mentioned, the case in Peru, you find it difficult to get a drill permit there, let alone permit a new mine. So I think, and of course, Peru and Chile are the biggest copper producers on the planet. So we're not going to see a serious supply response from those countries anytime soon. And I think that the governments of those countries are shooting themselves in the foot. A bunch of Marxist lunatics, really. Means I won't be doing business in Chile or Peru anytime soon, saying that, I suppose. But that's what's happening. And then you look to other examples. I think Canada and the US are showing really good leadership. Some of the members of government in both countries have taken the time to talk to people and look at what's required. And we're starting to see, real commitment to not only helping permit projects on a reasonable time. I say reasonable, it's still, if you go back sort of 10 or 15 years, it might have taken you 3 or 4 years to permit a mine. I think these days the average timeline's probably 10 years. Not reasonable in our sense coming from the supply side as miners, but certainly more reasonable on a global scale and in a global sense. But you still... So you're seeing some countries, particularly, as I say, US and Canada, starting to permit projects more reasonably. I think that you're also starting to see economic inputs from those countries. I know the Department of Defense, of all people in the US, is starting to look at funding projects for critical minerals in the US. You're seeing governments in both, more generally in Canada and the US, starting to look at funding projects for critical metals as well. And in Canada, we're getting tax incentives for not only drilling, but also developing critical metal projects. So there are some positive steps, but still not enough can be done. I think that, these guys, the governments of the world, the permitting authorities, are so far behind the 8 ball that I just simply can't see how the supply side can respond adequately to this demand change.
Analysts are saying, there's a looming recession that's on the way. And how is that impacting the resource market, particularly in the area of critical metals? Like, from Vizsla Copper's perspective, what measures are you undertaking to prepare for what could be an impending economic downturn?
That's a very, very good question. Look, we typically look in a sort of medium to long term. Certainly the businesses we build, we look to build over the longer term and stick with those businesses. So we don't focus too much on short term phenomena. And I think any recession, any downturn will be a fairly short-lived phenomena. Of course, we're still seeing fabulous job numbers out of the US and Canada and Australia. So I think, whilst we're in for a bit of short-term pain here, with higher interest rates and a possible recession, I don't think that will be long-lasting. And in the time frame that we're looking to advance, develop, explore, and build our projects, we're not under any threat. But what I would tell you is that, when you do get the sense that money might become difficult to find to advance your projects, particularly when you don't have cash flow, when you're just exploring or developing, you've always got to keep an eye on how much cash you've got, what your burn rate is, and where the next dollars are coming from. Now, we're very fortunate here at Inventor Capital and our group of companies. We've raised over $700 million in the past 3 years. We've got great support from capital markets and from both equity and debt finances. And so we're typically in good shape, but, as recently as a few hours ago, I was looking at the cash situation for a number of our companies and looking at where we can tighten our belts. So just, making sure that we've got the cash that we can last through that period of recession and through any negative economic impacts that come from that recession, and keep the lights on, keep the team on the ground, and keep our projects secure is what's important. So certainly, these sorts of threats, we do respond to them. Whilst I wouldn't say we're used to it, we've done this before, and so we're constantly keeping an eye on those things and responding accordingly.
Well, that's great to hear, and we will, of course, continue to watch this trend closely. Thank you for sharing your insights today, Craig.
Thanks, Marilyn. Really, real pleasure speaking with you.
Thank you. And thanks, everyone, for watching. Join us again next time for another engaging conversation on CEO Insights.